Welcome to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations and real estate investors in the great state of Texas, 150,000 members, participants, and attendees, going back to 2003. The Texas REIAs has 257 vendors, over 1,000 private money lenders, and 20,000 buyers, and lots of resources. And one of the resources that we provide to our members is market data, because you always need to be a student of the market. So I'm going to tell you what's going on in the market right now. And by the way, when it comes to market data, I do want to say most of the data we get from the Texas A&M School of Real Estate. We get it from a number of online sources. This is unbiased. We'll give you the data. You can make your own decisions. We're not here to try to persuade you of something. Okay, other than joining the REIA, we're not here to sell you anything. There's a lot of groups out there that give these market forecasts. And the market's going up, the market's going up. The Board of Realtors always says the market's going up. When we see data showing the market's going up, we'll say the market's going up. When we say the data is showing the market's going down, we're going to tell you the market's going down or the market's going sideways. Because we have strategies for any market, right? And you can make money in any market, but you do want to be a student of the market. So let's take a few minutes and talk about what's going on in the marketplace. And I'm going to start by kind of giving you the Texas roundup. In the great state of Texas, the average price house is $405,000, up 2.7% over a year ago. Not much, but a little bit. Median price is $328,000, up 1% over a year ago. Now, if you're only going to look at one number, like you just want to look at one number that kind of tell you how the market's doing, I will tell you this is the number you want to look at. Months of inventory. Let me define what that is. What does months of inventory mean? If you took all the houses for sale on the MLS and you stopped adding any more houses, we're just going to sell what we got until we're out, and we're not going to add any more. The question is, how long would it last? How long until we're out of inventory? How long until the shelves are empty? And the answer, 4.4 months, okay? Now, some are, and by the way, that's also the average amount of time to sell one house. Some are more, some are less, but the average is 4.4 months. So we got 4.4 months of inventory. Okay, let's put that into perspective. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If you've got to right around 6 months of inventory, you have a neutral market. We're in a seller's market. We have been in a seller's market for years. Now, a year ago, we had 3.5 months of inventory. I would describe 3.5 months of inventory as a hot seller's market. I would describe 4.4 months of inventory as a lukewarm seller's market. But we never went out of a seller's market. Why? Well, let me give you some history. 2021, prices in Texas went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. And then 2023, flattened out. Now, why didn't it crash? Well, two things happened over the last couple of years. The biggest thing that happened was what? Interest rates. Interest rates went up. And when interest rates go up, what happens to home prices? They go down. Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Who's not voting? This is opinion. You can't be wrong with your opinion. So who thinks when interest rates go up, house prices go down? Raise your hands. Who thinks when interest rates go up, house prices go up? Okay. So here's what I'm going to tell you about interest rates and house prices. House prices don't actually care about interest rates. House prices care about two things: supply and demand. Purest market in the world, supply and demand. So for sure, when interest rates go up, houses are less affordable, right? Which means fewer can afford them, which means demand goes down, which would normally push prices down. But that's not the whole story. Let me tell you about the rest of the story. So the demand has gone down for sure, but something else happened that offset that. Normally, 2/3 of houses that you see on the market for sale are resale and 1/3 are new construction. Right now it's inverted. Right now only 1/3 of the houses on the market are resale. Why isn't anybody selling their house? Because they got a 3% mortgage and they don't want to lose it. People should be moving up. Honey, the economy's okay, we got a job, we're making money, the stock market went up, other than very recently, right? So like people should be moving up, but they're not, because they don't want to lose their 3% mortgage. So yes, the demand went down, but the supply went down. And because the supply went down and the demand went down, what happened to the prices? They flattened out. They didn't go up or down. They just flattened out. For pretty much all of 23, flat. Most of 24, flat. And then something started happening at the very end of 24. What started to happen? Interest rates started coming down a little bit. When interest rates came down a little bit, right, the demand went up a little bit, and the prices went up a little bit. So if you were waiting for some big correction, that was probably it, and there wasn't much of it. But that's the history. Houston, about like the state. Average price 405, up 4.4%. Median price 325, up 1.6%, 4.3 months of inventory. Very similar to the state. Houston and the state look very similar. Some of the cities are a little different, but the state of Houston and the state of Texas, the city of Houston and the state of Texas. Now, lease prices. Let's talk about lease prices. In Houston, lease prices are up a little bit, 2.6%. Okay, why is that? When lease prices are up, what does that mean? Does that mean the apartment buildings are empty or the apartment buildings are full? They're full. Why are they full? Right? Well, let me give you a hint. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And then there's another 10 million people, we don't know where they went, right? But there are a bunch of them here too. And on a national basis, I don't know how many of you know this, but on a national basis, we are in the middle of a housing shortage. Who's heard that we have a housing shortage? Front page Wall Street Journal just yesterday. We have 4 million fewer houses than we have people that need a house to live. So they got to live in a house or they got to live in an apartment. So we got everybody moving to Texas, having babies in Texas, right? We don't have enough houses. And that means that the apartment buildings are full, generally speaking, and the houses are full, generally speaking, and the prices have not gone down. Market drivers. I'll take just a minute of this. The economy, it's doing okay, right? The economy doesn't really directly affect real estate, believe it or not. During the Great Depression, real estate prices went down a whopping 6%. Not much. During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%, right? It's not the economy. What it is how the economy affects supply and demand. But there is some effect from the economy. Like if people are confident, right now confidence is neutral, just neutral, right? Unemployment is low, job growth is good in Texas. Stock market up until a couple of days ago has been doing pretty well, but over the last few years certainly doing well. And when the stock market does well, people look at their 401k and they're like, oh, I'm richer, right? I'm a little more likely to buy houses. Business growth is doing good. So overall, the economic drivers are pretty good, which means people feel pretty good. They're a little more likely to buy real estate. Affordability. We got a red one. Interest rates went up, demand went down, right? House price trajectory, it's flat, not up, not down, it's flat, not up, not down. Housing supply, active listings flat, months of inventory is low. We're still in a seller's market. We never got out of a seller's market, right? So that's putting upward pressure on pricing. Housing permits trajectory, we're not building enough houses. And people keep moving here and having babies. So that's putting upward pressure on prices. Construction labor, this is a problem. Contractors are getting old and they're not getting replaced. The average general contractor is 58 years old. And kids are not becoming contractors. So I got some advice. You got a teenager, don't send them to college. Buy them a hammer. Oh, I'm serious. I know friends of mine that are plumbers that are making $1 million a year. Plumbers are pulling down 7 figures, guys. Plumbers, okay? Contractors are making fortunes. You know, get your kid a hammer. They won't have any student debt. They won't have to work for some jerk. They'll go on vacation anytime and they'll make more money than all their college friends, right? But whatever, right? But it's costing a fortune to build houses. That's the problem. And it's just gotten harder, more expensive. Housing demand, closed sales trajectory flat, pending sales trajectory flat. But this one here, this bullet should be like this big. This is probably the biggest one on the page. Migration. What is migration? Ratio of people moving in versus people moving out. Texas has huge migration. We gained 500,000 more people last year. That's 500,000 more, those are the ones we know about, that need a place to live. Right? We don't have enough houses. We don't have enough apartments. We don't have enough houses and apartments, and the houses and apartments you do have, they get full and they get expensive. So that's pushing price pressure up. And then, you know, a couple of wild cards. Got a new president, a few wars going on, whatever. So that's the data. What do you guys think? I'm just going to poll the audience. There's no right or wrong, just opinions. Who thinks that from here the market's probably going to go up a little? Who thinks the market's going to go up a little? Who thinks the market's going to go down a little? Who's not voting? Guys, come on. You have no vote. So I'll give you our forecast. We've been doing a forecast for 20 years. And by the way, our forecast is almost always spot on. And it's not because we're like super geniuses, not at all. It's because it's not that hard to do. Trying to forecast the economy, very hard. Trying to forecast the stock market, not possible. Trying to forecast real estate, pretty easy. And the reason it's pretty easy is because you know everything you need to know. We know exactly how many houses that we have. We know how many people we got. We know how many houses that we're building. We know how many houses we're going to need. We know how many houses that we're going to have. We know almost everything. We're not quite sure what interest rates are going to do, but all indications are they're probably going to go down a little more, right? In other words, there's just not much to guess at. But we don't see any big things affecting the market either up or down. So our forecast is the market will probably go up about 2% this year, not much. And the volume will probably go up about 2% as well. So that's our forecast. And I hope you enjoyed it. We also post this on our social media.